Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
This show is brought to you by Miles Franklin. They've been selling gold and silver for 22 years, and I'm a customer because when you buy, they ship. For more information, go to milesfranklin.com or call them at 800-822-8080. 1490 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. A great comedian, or perhaps he was a philosopher, once said, invest in inflation. It's the only thing going up. And with us to explore that possibility is Nick Santiago of InTheMoneyStocks.com. Hey, Nick, welcome back.
Hey, Kerry, how are you? Great to be back.
It's great to have you. I am doing fine. FinancialSurvivalNetwork.com. We launched it. It's taking off like you can't believe. Thousands of visitors every day. If you want to hear my previous shows, interviews with you as well, Nick, it's the place to go. I was thinking that because the stock market's down and because volatility is up, that it's probably a bad time to be in the market. But you, prior to this discussion, disabused me of that very idea. Why is it a good time to be putting money into the market?
Well, you're getting shorting opportunities for one thing, which has been very tough since late December. Another thing is if you're a day trader or you're a scalper, as I am, you're getting various opportunities throughout the morning, which is also very nice to see. Anytime we get an increase in volume or we get some extra volatility, there's always opportunity. You just have to really be able to navigate your way through the market, and if you're able to do so, there's money-making opportunities each and every day.
And assuming you're making money, you're showing a profit, and you have enough capital to keep playing with, what do you do with your profits at that point?
Well, ultimately, what you're going to do with your profits is you're probably going to need to buy something of a hard asset. It's either going to be some gold or silver when the time is right, and I think the latter part of this year will be the right time for that. You may even want to go out and purchase some property, which is also probably not done going down yet, but nonetheless, it is still a nice hard asset and something that you can take ownership of, and as long as you pay your taxes, they can't take it away from you. So that's the opportunities you got if you're making money in the stock market. Maybe one day, if the U.S. dollar index would ever go up, you could invest abroad or you could travel a little bit and enjoy the rest of our lives. But that's really what you want to do with your money if you do make it.
Right. So put it into something tangible. It looks like in certain places, the real estate decline, it just can't go any further down. But in others, it looks like there is a ways to go, because some markets have only gone down 10 to 15%, like around Washington, D.C. and around New York City.
Yeah, well, all real estate is localized, I guess, right? So certain areas are going to do better than others. Washington, D.C., which actually has all the spending in the world going on at that place, so obviously it makes sense that real estate held up the best there, especially with the new influx of congressmen and their staff. So that's the reason why that's held up so well. However, we've had real estate top out since late 2005. Now, I mean, I'm not a real estate bull by any means, but I have stepped in and picked up some property here myself over the past few months, some land, and I think it's not a bad time to do so. Anytime you can pick up property under the cost of building it, it sounds like it may be a worthwhile idea. Also, you have many people out there in the world today, I should say at least in the United States, not paying their mortgage any longer. And when too many people sway to one side, it might be a good time to go the other way. So I think that real estate, although I don't think it's going to turn, it turns like the Titanic, it will take years and years to go before real estate is worth anything close to the 2005 levels. However, it may be a decent time to start nibbling on some cheap property if you could find it out there.
And also what you see in the real estate market, which you haven't seen for a long time, is a lot of cash flow plays where you can borrow cheaply, even on single family homes. You can rent them out and realize a positive cash flow every month if you're inclined to be a landlord, which from previous experience, I can tell you it's not for everyone. But you look in a neighborhood, if the average house is selling for less than 3 times the average income in that area, probably a good buy. If you can purchase it and carry it monthly cheaper than you can actually rent it for, definitely a great buy. And keeping those things in mind, it's probably good, but you got to have a cash flow, which brings us back to inthemoneystocks.com. How do we as traders / investors go into this crazy manipulated market and have any reasonable expectation of turning a profit?
Well, the key is, as you alluded to earlier, it's where we don't trade earnings anymore. We don't really trade stocks. What we really trade is inflation. And these central bankers, and it's not just the Federal Reserve, it's all of the central banks, whether it be the People's Bank of China, whether it be the Swiss National Bank or the Bank of Japan, the ECB, it doesn't make a difference. There are just so many loose money policies out there by all these central bankers. Once the chart patterns tell us it's time to jump on board, that's what we do. We really want to jump on board. I think the last time I was with you, I said I was starting to get bearish on the market, and that has worked out pretty nicely as the markets have rolled over a little bit. But later this year, the same old is going to happen. They're going to come in and they're going to throw more money at this problem via a QE or an Operation Twist number 2 or Oliver Twist or Robin Hood, whatever they're going to call the title. But the bottom line is these guys don't know anything else. They only know to print more money, to inflate, and if inflation gets out of control, we'll pop another bubble and we'll go through another crisis, and they'll start the process all over again.
Yeah, that's like you look at the shampoo bottle, it says apply liberally so you can buy more quickly, and then rinse out, repeat process. Now, I don't know about you, but my hair doesn't get that dirty. Usually it's okay just to rinse it out once, and I'm okay. But with the Federal Reserve, they never stop washing this money, do they?
No. There are such big problems out there in the world. I mean, and to think that debt is going to solve the next debt crisis, more debt is going to solve the next debt crisis is insanity, right? So I think Albert Einstein said insanity is repeating the same thing over and over, expecting a different result. This is what they do, and basically we've jumped now from basically all the crises that we've had in the 90s, which were the Asian contagion, the Russian ruble crisis, long-term capital crisis. Then we went into the real crisis, which was the dot-com technology bubble. Then we went into the housing bubble. Now, maybe we're in the commodity bubble. Who knows what the next bubble is going to be? But this is what all easy monetary policy does. It's a bubble creator. And, we'll have to see when the next bubble comes along. But, just realize it doesn't take that many years. We're already 3 years into this bull leg from 2009. Next few years are going to be interesting because we'll come into the next bubble and we'll see how we handle it.
Well, we were talking about Will Rogers, who, in my opinion, one of the funniest people that ever lived. And one thing he says that's totally applicable is he used to say, and I think he was referring to World War I at the time, ignorance got us into this mess, and ignorance will get us out. And I think that is the rallying cry of the Federal Reserve, because they just keep banging their heads against the wall, making the same exact mistake that has been made throughout history with no recognition that it's not working. Or if there is a recognition, they certainly don't share it with you and me, right?
Well, they definitely don't. And, the way we have to look at that is that's okay. As long as we know about that, let's profit off of it. And that's the way I look at it. And once you have enough significant amount of funds put away, roll it over into some hard asset like gold and silver, roll it over into some property, you may even want to buy some cattle. But that's the way I think people need to approach it for the longer term. And, they're giving us opportunities to do these things, and we want to take advantage of it while it's here.
Hey, for sure, because they're behaving in a predictable way, and it really is having a predictable outcome. And the results, you just have to watch the markets and understand, like Tyandro says, you could just follow the money. You know when they're doing QE3, even though they say they're not, and they're probably never going to admit it, but they're doing it now. They're buying up the bonds, and it's all about the inflation and liquidity.
100%. What they're actually trying to do, in my opinion, is trying to create another mini housing bubble. And the problem is that so many people cannot get loans at the moment. Now, maybe you and I can walk into a bank and get a loan very easy because you have a high credit score. You've been paying your bills on time, and the banks are happy to lend somebody money that has money in the bank. However, somebody out there with maybe a 650 credit score or something like that, it's not so easy to get a loan. The bank isn't lending money. So, and why should they when they get money every night at an overnight lending rate of 0%?
With zero risk.
The stock market.
With zero risk. And
they have credit card business, which they charge the average client 17.5%. So the average credit card holder has a 17.5% credit card. They buy stocks, which is the reason why the stock market goes up. They buy commodities. That's the reason why commodity markets go up. And basically, they don't need to lend money. They're not in the lending business any longer.
You're exactly right, and that is exactly the problem, because they're just these big hedge funds that go to the casino, and it's like if I go with one of my kids and I give them $100 and I say, go hit the slot machine, and about an hour later, if I'm lucky, they come back and they want another 100. And in the case of the banks, the Federal Reserve, oh, we're so sorry you lost that money. Here, have some more, double down, and see if you could do better on it. Or it's like the whale comes into the casino and he owes the casino so much money that if he doesn't pay them, they're going to have a real hit in earnings. So what do? Rather than canceling his line of credit, they double up because maybe he'll win it back and then he'll pay off his other marker. And that's the insanity of this whole system. But I guess from your standpoint, that's what creates many opportunities in the market. And you just have to try to not get caught without any of the hard assets once the fake assets go away.
Well, the thing is that if this whole deck of cards ever comes crumbling down, you're going to want to have gold and silver because that will be the last man standing. Ultimately, that's what you can use to barter with. God forbid we ever go into a big deflationary tailspin or a hyperinflationary tailspin. It really doesn't matter. If push comes to shove and no one wants to take your currency, the bottom line is gold and silver, they will take.
Absolutely. Gold and silver, always money, regardless what they tell you, whatever the government, the Federal Reserve tries to tell you, it's a barbarous relic. Ignore it, always money. And one other thing about those credit scores, algorithms, it's just like Wall Street. They worship at the altar of the algorithm. And FICO scores are nothing but an algorithm. I worked for a couple of years consulting to a mortgage bank. And what I used to do was the clients who were off, you needed a 640 to qualify for most mortgages. Originally, it was 620. They keep raising it. So if you're 20, 30 points off and you have a couple of bucks, we run a simulation and I can tell you what cards, what debt to pay down, and we can raise your score legally and get you to qualify. Sometimes it's as simple as you made a late payment or you didn't pay an account, credit bureau, the collection agency put a negative mark on your report, but they will take it off if you pay them a portion of what you owe. And they just want the money. They don't care whether you have a 620 or a 850. It's irrelevant to them. They just want to get paid. So we would come up with strategies completely legal, ethical, and game basically geared at getting you to qualify, and you'd qualify. So it's something that people need to consider. They can always send me emails, I have links for them to get their credit reports, and nothing is hopeless unless you're in foreclosure and bankruptcy at the same time, and then your credit is shot to hell, and you're just going to have to wait a year or two. But otherwise, there's always strategies. There's always ways to work the numbers. And I guess that's what In the Money Stocks is about, because there's always a way to make money on the market if you chart it properly and get in and out at the right times.
That's really what it comes down to. And that's simply the reason why we use shorts. You know, a subscriber of mine today said, Nick, Apple earnings, the whisper number is going to be 12 and change. The consensus is $10. I said, wait a minute. I don't care what the numbers are. I only care about the reaction of the money flow. Is price going to go up? Is price going to go down? Can I find an opportunity in there? And that's really the bottom line to trading. It just comes down to, hey, if there's a Federal Reserve out there, if there's a central bank out there, Bank of Japan, the ECB, it doesn't make any difference to us. If they're going to pump money into the system and we can catch the move, we're going to catch it. When that money dissipates and there's no more money there and they're flat-footed, we're going to short that market. And that's what we try to do. And we're not always going to be 100% correct. Nobody is. If anybody ever says that, they may as well be selling snake oil, because they're not going to be 100% correct. It's impossible to do. But what you can do is limit your risk, take the best short patterns, create a good risk-reward scenario, and hopefully make money on a consistent basis.
Yeah, you can't ask for more than that. And as long as you're putting it into things of value, like gold and silver, like land, real estate in select markets, even farmland. I like farmland. Population's going up. Can't do without food. Energy, I like a lot as well. But things of real value, then you're going to get through the depression okay, whether it's a recession or, I should say not a recession, but whether it's deflationary or inflationary, the fact is the purchasing power of real things goes up. Gold and silver always goes up, inflation or deflation, and that's what you really need to be thinking about. So, Nick, we got to wrap up. People want to learn more about your trading techniques. Where do they find out about you?
Well, they come over to inthemoneystocks.com, come over, look at our free stuff there on the website. We offer a blog. We also do many, many reports. We'll put out a ton of different content. I always tell people that come over to just try out our archives, look at our past calls, look at what we've done, look at our cycle work, take a look at all the past information that we put out there for free, just all free content. Then give us a try. We offer a 7-day free trial to our intraday stock chat as well as our research center. Research center, you're going to get all of our swing trade setups. You'll also get our nightly videos. You'll get all of our cycle work. There's just so much content out there. And this Saturday, in fact, we're hosting an In the Money Stocks methodology webinar from 1 o'clock till 7 p.m. It's a boot camp of a trading day. You'll learn all of our techniques. You'll learn our cycle work. We'll also talk about sentiment and all the different market patterns that we look at each and every day to profit in this market. Come on over, give us a test drive, try it out, and usually most people that come over, they stay with us for years to come.
Probably for good reason. Hey, Nick, thanks so much for being with us on the Financial Survival Network. To hear this interview again, as well as others we've done with Nick and many others, just go to financialsurvivalnetwork.com. Nick, you be well. We'll talk with you again in a short while, because there's going to be a lot to talk about soon. I guarantee that.
Absolutely. Thank you for having me, Kerry. Have a great day.
You too.